Everyone in Addis is talking about starting a business. It's electric, isn't it? With the new 2025 reforms, the ESX launch, and this incredible tech boom, it feels like the Ethiopian dream is finally within our grasp. But let me give you the cold, hard truth that nobody else is telling you. 9 out of 10 of you watching this right now who start a business this year will be out of business by 2027. That's a fact. In 2025, the rules of the game have completely changed. The old way of doing business, the one that relied on who you know, on high margins in a closed market, that way is dead. It's over. Today, we're diving deep into the 4 brutal reasons why so many Ethiopian startups are crashing and burning. And more importantly, I'm going to reveal the 3 secret traits of the 10% who will actually make it, the ones who will become the next multi-million-dollar success stories. So, if you are serious about your capital, if you're serious about your future, you need to watch this video until the very end. All right, let's get straight into it. The first reason your business will fail is what I call the interest rate executioner. The credit ceiling is real. In late 2024 and all through 2025, the National Bank of Ethiopia implemented strict credit growth limits to control inflation. Now, for a startup, this is a death sentence. Most founders create their business plan assuming they can just get a bank loan once they show a little bit of traction. But the reality is harsh. With interest rates hovering around a staggering 18 to 20% and banks demanding heavy collateral that most startups just don't have, your dream business quickly turns into an expensive debt trap. This is where we see the first split between the 90% and the 10%. The 90%? They borrow early. They burn that precious cash on a fancy office, expensive furniture, and a big launch party. Then, when those crippling interest payments hit, they suffocate. They run out of air. The 10%, however, are what we call capital light. They are masters of bootstrapping. They use pre-sales from actual customers to fund their growth. They focus on generating revenue from day one instead of begging the banks for money they can't afford to pay back. They understand that debt is a killer in this new economy. Reason number 2, the foreign giant wave. This is all about liberalization. For decades, Ethiopian businesses were protected. We operated behind what you could call retail walls. Foreign companies simply couldn't compete in our retail or wholesale sectors. Well, in 2025, that wall has crumbled. It's been torn down. As global retail giants and highly efficient, specialized wholesalers enter the Ethiopian market, the traditional middleman business model is being completely wiped out. Think about it. If your entire startup's value proposition is just importing something and reselling it, you are firmly in the 90% who are destined to fail. You cannot outcompete, outprice, or outscale a global giant with a billion-dollar supply chain. It's impossible. So, how do you get into the 10%? You must provide what I call localized value. This is your secret weapon. It means offering something a foreign company can't easily replicate. This could be deep, intricate local logistics that you've mastered. It could be hyperlocal language support, serving communities in ways a multinational never could. Or it could be creating products specifically engineered for the Ethiopian consumer, for our tastes, our needs, and our environment. That is your moat. That is your protection. Now for the third reason, and honestly, this is the biggest mistake I see every single day in the tech hubs around Addis, the copy-paste curse. Young, brilliant founders see a successful app in the US or maybe in Kenya, and they immediately try to build the Uber of Ethiopia or the Amazon of Ethiopia without taking a hard look at our own unique infrastructure. They're trying to build a solution for a problem that exists in another country. Our 2025 reality still includes frustrating logistics bottlenecks. It includes unpredictable power fluctuations. It includes a digital payment ecosystem that's still growing. A copy-paste business model is doomed to fail because it assumes a perfect, stable environment that simply doesn't exist here yet. The 90% are guilty of this. They build for a market that they wish existed, for the California of 10 years ago. The 10%, they are different. They solve a painful, specific problem that exists right here, right now, in Ethiopia. They build for the reality of today, not the dream of tomorrow. They find a real-world Ethiopian problem and build a real-world Ethiopian solution for it. Finally, the silent killer. The fourth reason, financial blindness. This is all about currency volatility. With the Birr undergoing floatation, The cost of everything you import, every service you use, is moving. Not every month, not every week, but sometimes every single day. If you are not checking your margins daily, you could literally be selling your way into bankruptcy without even knowing it. You look at your sales numbers and you think you're making a great profit. But then, when you go to restock your inventory or pay your suppliers, the bear has moved against you, and that profit you thought you made has vanished. It's gone. Financial discipline isn't just a good habit in 2025, it is a survival skill. So, after all that doom and gloom, how do you actually survive? How do you join the 10%? It comes down to three non-negotiable principles. First, cash is king, but cash flow is God. You have to get this into your head. Stop obsessing over total sales or revenue. Those are vanity metrics. The only thing that matters is your daily cash in versus your daily cash out. In the volatile economy of 2025, liquidity, having cash on hand, is your only shield. It's what allows you to survive the unexpected. Second, the efficiency obsession. You have to become obsessed with doing more with less. Use the amazing digital tools at our disposal. Leverage AI for customer service. Use Telebirr and M-Pesa to automate payments and collections. If your business requires 20 people to do a job that 2 people can do with technology, you are already behind. You will fail. The winners of this new era will be the ones who are ruthlessly efficient. And third, niche specialization. Don't try to be everything to everyone. That is a recipe for disaster. Instead, pick one specific, painful problem for a specific group of people and become the absolute best in the world at solving it. Maybe it's providing a reliable agricultural cold chain for strawberry farmers. Maybe it's building a hyper-fast e-commerce delivery service just for the bowl area. Own your niche. Dominate it. Listen, 2025 is going to be a year of what I call the great filtering. The weak businesses, the copy-paste ideas, the inefficient operators, they will all be washed away. It's going to be brutal. But the strong ones, the businesses that are lean, that are smart, that adapt to these new reforms, they are the ones who will build generational wealth. This is the biggest opportunity of our lifetime. Now I want to hear from you. Are you building a startup right now? Tell me your business idea in the comments below. I'll personally read through them and give you my honest feedback. Am I putting you in the 90% or the 10%? And if you got value from this, if you want more no-hype, real-world business advice for Ethiopia, make sure you like this video. And definitely subscribe, because in our next video, we're going to break down the 3 most profitable niche sectors to enter right now. You don't want to miss it. Thanks for watching.